Good morning, this is Graham Bibby on the 30th of October 2014. I just wanted to say thank you to all the well wishes, first of all, I've had about my big birthday, which was yesterday on the 29th of October. So I thank everyone for the literal hundreds of messages I've had in through Twitter, email, and Facebook. And I send you my best blessings back for health, happiness, fun, and abundance, which is your natural entitlement on this planet. We just finished the Millionaire Masterclass here, run by Darren Stevens, and I think we're transforming a few lives. So let's get on to the markets, and I want to just explain and show the extraordinary things that have been going on with the markets, not only recently but this year. And we'll start here. I've got the Nasdaq. Just checking the chart over 55 seconds. We've got about 6 minutes. We're showing the Nasdaq here. And this was the breakdown here in the markets, which was quite significant. But it's strange, we seem to have had this here in January, we had it again in March and April, a little bit in July, and this is a very pronounced breakdown like this. Now normally these breakdowns aren't short-term things, they're continuous breakdowns, but you know, we hit where the arrow is here, and then we've had what I call a melt up. We've had nothing but up days until last night, and even that's not significant. So when we've fallen down below the support level, and I would say this top here, the circle is, and these points here, just under 4.4 should have been support. 4.5 certainly should have been support. Well, we've broken up above all of those, and the weekly moving average is moving up. Now I just want to explain, when I mention the market means the index. So, and because I'm normally referring to the US, I refer to the US market. But you see, what happens is we get a period of this movement, and then we'll get a breakout and we get this type of movement. So the idea is, in our methodology, that I'm there to limit the downside. It doesn't mean get rid of the downside, it means limit it. Because you never know when one of these trends can turn into, let me just, one of these trends. This is the global financial crisis topping in 2007, and the market fell almost 60%. So you can see a little bit of a downturn here, a little bit of a downturn here, but we've reversed to the upside. Let's just make that a bit bigger, and you see the downtrend here, and if I turn that back into daily, this is the March-April decline, this is the January to February decline, but we reversed up, then we brought back down again, reversed up, tested back. This should have been significant support, because we didn't break down like this before, as we did before. We managed to get support and move higher. So this normally, 90% of the time, because it's not an exact science using charts and technicals, backed by the fundamentals of the underlying stops, well, normally when this happens, we get support, we're moving in that direction. But we broke down, and then we've had basically what I call a melt up. So it's up days, 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 no correction. Because normally you get up, bit of a correction, and move back, and then buying in. So you have a trend. Last night, we had down here. We ended down, so you could say it's a down day. But you know, we've ended towards the top of the range. But it's looking like that could be the correction. We could get a bit more of a correction. And I just want to show you, this is United Rentals. And again, we had the sell-off, one-way action up, but then we had a correction 2 nights ago, and we moved up. Now this is actually down last night, but we moved up. That means I have a place here to put a stop loss just below the 105 level. And the reason I can't go in and up days is my stop loss would be the last bottom, which is here, which is about 89, and you know, we could have been buying at 105, 106. So stop loss would be too far away. Skyworks Solutions, again, you know, downtrend. Then this is a significant bottom here, with the overall market looking stronger, and that's actually up last night from a buy signal, depending on where we managed to buy on the day. but the stop loss would be here. So again, I have a reasonably close stop loss position. It would be 54, but if I hadn't put it at 54, it would be down here at about 44. 54 to 44 is 20, so that's 20% loss. Sorry, 20% before we get out. But now my stop loss is up there, which is why I'm in where I am. Sun Micro device again, Meltup. And again, you know, we can be negative about things, we can be positive about things. This is not an exact science, but you don't normally get breakdown like this and then this quick transformation. But this is below 22 and it reached 32 2 days ago. 22 to 32. That's almost a 50% rise. Now the positive thing, it just shows that I've got some of the greatest stocks on the planet, because the market hasn't risen anywhere near that. And if I show you the S&P 500, here we are. Again, it's a bit of a melt up, but it's gone from 1825 to 1982, which is about 160 points. Maybe it's 7 or 8%, but my stocks are bouncing 20, 30, 40% because they're so undervalued. They're such good value. They have superior earnings growth. So I know when this period of uncertainty and keeps selling off, when we get through that and the market is inverted commas normal, my stocks will seriously outperform me, as they're already demonstrating right now. I'm really sad because some of the stocks I love, like this one, Gilead Science, really cheap, really strong earnings growth, was breaking down and then it bounced from 92 to 110. That's 18. That's a 20% rise. Now, what I'm happy about is it did have a correction last night, 2.38%. It fell more than that at one stage. So if we turn up from here and above these tops, that would be a great place to enter and place a stop loss. I have so many great stocks in my watch list. This thing, talk about Meltup, Celogen. Look at this. It was breaking down here. It went below 85 to 84, and then it bounced to 105. So 84 to 105 is 21. So that's a 25% rise in 10 days. That is huge. No real correction. We were down last night. That may be it. If we turn up, this would be a point to enter and put a stop loss. So, it's been a difficult year, but I'm still all about protection. I've just told my clients, look, the first thing you need to know is I'll always protect your capital as much as I can. I'll be out. And when normal markets follow on, and I've done this for 30 years, so I've seen this before, the market will clear to the upside or the downside. If it's to the downside, we'll put in cash, and if it's to the upside, we'll start knocking the ball out of the park. It looks to me as if more and more buy signals are coming, and I hope this time it continues in that trend for at least a few months, because in just a few months we can get the whole year's return. So it's Graham Bibby just explaining what the sell-off down was, the melt back up. Melt back up is also partly because people were short the market. That means they're trying to make money on it falling, and if they can't make money on it falling and it starts to rise, they must buy back their positions. So you have very little profit taking, which may be happening now, and it certainly happened on a few stocks. So it's Graham Bibby here, hoping that you've enjoyed this brief. I thank you again for your best wishes, and let's look forward to the future months and years ahead of health, happiness, fun, and the creation of abundance. This is Graham Bibby coming up to the 9-minute mark, 30th of October, saying thank you very much, and I'll speak to you soon.